Debit or credit? You've probably been asked this question at checkout 1,000 times. But have you ever stopped to think about the real difference? In this video, I'll break down how these two cards work, their pros and cons, and when you should use each. Stick around because I'll also share simple scenarios to help you make smarter financial decisions. Let's start with the basics. A debit card is directly connected to your bank account. When you use it, you're spending your own money. It's like using cash, but digitally. On the other hand, a credit card lets you borrow money from the bank. You pay it back later, either in full or over time, but that borrowed money doesn't come for free. It can come with interest. Now that you know what they are, let's dive into the key differences. First, the payment source. Debit cards use your money. Credit cards let you borrow money. Second, interest. Debit cards don't charge you interest because you're using your own money. But if you don't pay off your credit card balance on time, you could end up paying high interest, sometimes over 20% annually. Lastly, credit cards often come with extra benefits, like building your credit score or earning rewards points. Debit cards don't offer these perks, but they do help you avoid debt since you can only spend what you have. Now let's compare debit cards and credit cards across a few key features to see how they stack up. First up is security. Credit cards come out on top here, offering stronger fraud protection. If there's an unauthorized charge, you can dispute it without losing any money up front. Debit cards, on the other hand, take the money directly from your account, and refunds can take time. When it comes to spending control, debit cards are the winner. You're limited to spending only the money in your account, making it easier to stick to a budget. Credit cards, however, can make overspending all too tempting because you're using borrowed money. Building credit. Credit cards also have a big advantage here. They help you build a credit score if used responsibly, which is important for loans and financial opportunities. Debit cards, unfortunately, don't affect your credit score at all. Rewards and perks are another area where credit cards shine. Many offer cashback, points, and travel rewards, as well as purchase protections. Debit cards typically don't provide any of these benefits. Debt risk. Debit cards have an advantage when it comes to debt risk because you can only spend the money you already have. Credit cards, however, come with the risk of accumulating debt if you're not careful. Another advantage of debit cards is that there's no interest to worry about since you're using your own money. Credit cards, on the other hand, can hit you with high interest rates if you don't pay off your balance in full. Ease of use. Both debit and credit cards are easy to use and widely accepted, so this one is a tie. Credit cards do have the added benefit of flexibility if you need to make a purchase before payday. Finally, fees. Debit cards typically don't charge any fees, while credit cards can come with annual fees, late payment fees, and more. So, as you can see, credit cards and debit cards each have their strengths and weaknesses. Which one works best for you depends on your financial habits and goals. So, when should you use each card? Debit cards are perfect for everyday expenses like groceries or bills. They're also great if you're trying to stick to a budget or avoid debt. Credit cards, on the other hand, shine for big purchases, travel, and online shopping. They often include travel insurance and purchase protection, things you won't get with a debit card. To wrap it up, debit cards are great for keeping your spending in check, while credit cards offer perks and flexibility if you use them responsibly. Remember, there's no one-size-fits-all answer. It all depends on your financial goals. Which card do you prefer? Share your thoughts in the comments below. And if you found this video helpful, give it a thumbs up and subscribe.